The first advice I'll give you is that if you're running a business, you should keep running that, okay? Uh, I truly believe that you are your own best capital allocator. So if you are a lawyer or you are a hairdresser or you are, a building contractor and you generate a sustainable return on investment in your business and your business requires capital, the first thing you should always do is invest in yourself. Just like I would not recommend investing in stocks. You invest in your business. Your Apple, who knows, can become Bloomberg tomorrow, right? So I want you to encourage you to invest in your own business because you don't know where your business can take you, right? So I would encourage all of you to do that. A lot of businesses can't take more capital, okay? If Vivek starts generating 100 crores a year in cash flow, his business won't require that much capital. Then you go into investment. That is a fair point. But the first principle of this, Vivek, is that you invest in yourself, okay? And your strength, your area of competence. You do that. That's what my suggestion to you is. Beyond that, if your business can't take more capital or the return on capital is not great or it's stuck in accounts receivable, stuck in inventory, then I understand. Then you start moving to investment. So make a two-stage process. But always benchmark yourself, what is your return on investment capital, okay? It can't be that you're using your services at zero, using your father's factory warehouse, which costs you zero, and then making a capital. You should do an honest evaluation. Is your business earning a return on capital? If the GSEC bond is at 8%, you should be generating 10% return on capital with true cost accounting done in there. If you do that, keep investing in yourself. That is the best investment you'll ever do. But if your business cannot generate the kind of return or it can't use that much more capital, then the public market's a good place to go in and look.
All right, sir. So there are a couple of attendees here who are investors also in market, full-time at the early age. Now, they had a question which they posted to me right now that investing is an extremely boring activity and it involves a full dedication in reading and just trying to figure out things which are out of the box. They wanted to know at your early stage of when you decided to invest in the market, how did you deal with that boredom of involved in the investing process?
My wife used to say that, reading, no acting. And that's what she used to criticize me about. Because it's a business that, it's like watching grass grow. It can get pretty boring, right? So I used to have these fantastic theories. I used to tell in the 80s when I was just starting my business that I think India will become a $2 trillion economy and that the per capita consumption of, at that time it used to be Xerox copies, could be Gillette, whatever. We have 1 per 100 people using a shaving machine today. This will go to 5 per 100, and you know what that'll happen to my stock once that happens. So all these fantastic theories, I used to keep talking to her about that. Because I used to read about them, right? So my best example stock that I became well known. How many of you have seen the film Diwar? This Amitabh Bachchan sir. Everyone's seen the film. So good, you'll relate to the anecdote I'm about to tell you. There's a scene in Diwar which you'll all remember. Amitabh Bachchan, Parveen Babi, they're saying in a bar at the Oberoi, right? Amitabh Bachchan was a bit of a crook at that time in that movie, and Parveen Babi is a lady of easy virtue out there. But they've become friends, which is great. So they're sitting in a bar, and this Parveen Babi is in a nice, provocative dress, and she swivels towards the camera and says, ये शराब भी बड़ी अजीब चीज़ है. अमिताभ पूछे क्यों? बोले इसे देखो, ये पी रहा है क्योंकि खुश है, ये पी रहा है क्योंकि आज गम में है, ये पी रहा है आज दोस्तों के साथ है, ये पी रहा है आज अकेले है. Remember, this is a timeless business. Alcohol is a timeless. People will always want, alcohol or drink with buddies or, do something, social, if you will. So when I came to the stock market and I started looking, maybe in 2001-2, you could buy the entire alcohol industry in India, okay, the liquor industry in India, which includes beer, spirits, wine, all of that, for maybe $150 million US. The United Spirits and Breweries own 50% of the market. Together worth about $150 million, 500-600 crore rupiah the was time. So the entire industry was worth about $200 million, let's say, okay? Because they own 50% of the market share. Now, think about the way I was saying about India at that time. We had 1 billion people. We had GDP growing at 8% at that time. We had every year, I forget the exact number, a huge percent of people become 21 years of age, which to me meant they could start drinking, right? And we were still a non-Islamic country, so there's no social prohibition against drinking. And we realized how young people throughout the world behave. You know, they want to go to a happy hour, they want to have a good time, whatever. And yet these companies were available so cheap to us that time. And the way I used to explain it to some of my friends who are back there in the audience, I would tell them that, so say McDowell was worth 200 crores at that time. The value of McDowell's was 200 crores. So I would tell them that, okay, you can buy 10% of McDowell's for 20 crore rupees, correct? It was 200 crores, 10% to 20 crore rupees. And what does that mean? That means every 10 bottles of beer sold, one is yours. That's the way I used to think. Ownership of a business. Every 10 bottles people drink beer, one I have sold. That's the way I used to think out there. Or I said, you can take the 20 crores and buy a flat in NCPA, which is in one of the prestigious buildings in Bombay. 20 crore mein shayad milta, shayad 25 crore lag jata, I don't know, but it was that expensive. Now think about what I'm saying, the value proposition available to you, that you could buy a flat in NCPA and probably live comfortably, but nothing beyond. Or you could buy 10% of India's alcohol business. Think about what I'm saying. Look at the value proposition sometimes that these opportunities offer us in the stock market. So, if you do that kind of math, it makes a lot of sense to look at the stock market.
Right. So I've interacted with you quite a lot, and I see that your approach is extremely top-down approach. You actually try to figure out the size of the market opportunity and then pick the best candidate in that opportunity. Is that true, sir? Is this, can I conclude that statement?
Vivek, I do both, to be honest with you. I will do top-down. For example, I saw after the tech boom in India, with the computer software boom, like I told you about, the Infosys, Wipros, TCS doing well, I realized that telecommunication become cheap in India. Finally, it had become, regular telecommunication costs. So there's a big boom in BPO businesses in India. So it's a top-down approach. You look at BPO and buy there. But occasionally I look at companies also from a bottom-up approach. They're just too cheap. For example, the public sector stocks which I bought in my career, I bought a company called Bharat Electronics at about 40 rupees, which implied a market cap of 300 crore rupees. They were a dominant supplier of defense equipment to the government of India. 40 rupees, $2 dividend, that is a 5% yield. These stocks were available for. So I did the bottom-up analysis. I realized as soon as the turnover went over 1,600 crores, it would start hitting the bottom line, and which is exactly what happened. The stock, luckily for me, went up from the price at 40 to almost 200x over a period of the next 15, 16 years. Company didn't do anything great. It grew at 12, 15%, but the sheer amount of profitability that came because of the leverage they had made that a great stock to buy. So to be honest, I've done both. If you ask me, I tend to do more bottom-up than top-up, but I enjoy top-up also because it gives me the intellectual satisfaction of figuring out a trend.
Right, right, sir. Sir, before I keep the question answer open for the floor members, the last question is, because quite a lot of us are entrepreneurs here, if you can give a pictorial view or maybe a 10,000 feet view of the fundraising plan which an entrepreneur should do. When an entrepreneur should say that, yes, I'm ready now to go to the market to raise fund. Because you have seen all scale of entrepreneurs raising from the market.
Yeah, I'll answer this two parts. First part is, what do outsiders look for in an entrepreneurship? I think when someone on the outside looks at an entrepreneur, they want intelligence, they want passion, and they want integrity, okay? And if you have intelligence and passion but don't have integrity, you lose it all, right? So people won't invest in you or that, The really good investors tend to look for the matrix of these three. All these three things must be in, close collaboration with each other. The integrity part, the intelligence part, and the, promise, the opportunity, the passion part of you. But integrity is very, very important. Your alignment of interest between the person who's putting the money and you should be there. And you must treat that capital as sacred as yours. It's not that because you got cheap capital or access to capital, that can be blown away in a fancy car or a holiday or, a great office structure. So it's very important to kind of do that. When is the right time to raise money? I don't really know, to be honest with you, about that. But typically, if you're a good entrepreneur today in India and you have like 3-4 years results, people will come to you. There's so much private equity fund going on, so many VC funds deals running, that if you're a guy who's shown a scalable opportunity and has produced a good set of numbers, I think people will come to your door. You don't have to go to them.
Right. So, I mean, maybe I can just rephrase this question that is it a good time for an entrepreneur of, say, old school businesses, turnover of 50 crores to 400 crores? Is it the right time for them to look at equity market fundraising for coming 5 years perspective?
I think so. I think so because, I mean, again, one of the wisest persons I know in the stock market who's seen 50-year career in the stock market has seen all the booms, busts, whatever. And I think someone asked him a very poignant question. He said, so what do you think, they asked him actually, is the best time in your career to have invested? Was it in the 80s? Was it in the tech boom? Was it in the India liberalization boom? Which was the best era to invest in India in the last 40 years? And without missing a beat, he said, the best era to invest in India is the next 20 years, right? Because the opportunities in the next 20 years will be far superior than they were in the last 30 years, as good as they were in the last 30 years. Like I told you myself, the index went from 636,000, 60x move in the index itself. But the wisest man I know feels the best opportunities will be in the next 20, 30 years. Why is that? Because we are a nation of 1.2 billion people, so you have a natural market that is so huge. How many countries have a kind of market? China has this market, we have this market. Okay? We dwarf every other market. There's rising aspirations for the entire class in terms of consumption. So the India that grew at 3%, so-called Hindu growth rate is now over. We'll grow at least at 6%. Bad governments will make us grow at 6%, 7%. Good government will do at 10%. I don't think we're going to get a good government in India, so don't hold your breath. I won't hold my breath. I think we'll grow at 6, 7%, but that's good enough for us.